Land Development Authority, or Felda, has apparently secured government financing for its controversial purchase of a 37% stake in Indonesia's PT Eagle High Plantations Tbk. State news agency Bernama quoted Felda Deputy Director General Muzamil Muhammad Noor as saying that the government financing was in the bag but gave no details as to the amount. Despite mounting criticism of the high cost of the deal, Muzamil says that the deal was simply too good to pass up, saying that if Felda didn't do this deal, the planter would be left on the sidelines watching its competitors grow by leaps and bounds. Felda said that it will fork out $505.4 million for the stake, which represented a 95% premium to Eagle High's closing share price at the time. The high price tag had raised more than a few eyebrows, with critics calling into question how Felda was going to pay for the acquisition given its current finances. Speaking of the Felda and Eagle High deal, PKR VP Rafizi Ramli is alleging that despite Felda emerging as the biggest shareholder in Eagle High, control of the company will remain squarely with owner Tan Sri Peter Sondak. He backed up his claim by saying that both CIMB and Credit Suisse had pointed out this detail in their respective assessment reports back in July 2015. In his own words, Rafizi says that it was unprecedented madness where a minority shareholder holds control over the company. He says that this fact invalidates Felda's justification for paying 3 times above market value for the stake. Felda has defended its purchase, stating that it was justified given Eagle High's sizable land bank in Indonesia, which Rafizi refutes, saying that with no control over Eagle High's business direction, it would not have access to the Indonesian planter's assets. Berjaya Corp saw its net profit for the second quarter of FY 2017 jumped by 44.4% due to higher revenue at its property investment and development business segment, as well as better numbers at its motor distribution business. Net profit for the quarter came in at 176.5 million ringgit compared to 122.3 million the previous year, while revenue clocked in at 2.5 billion ringgit, 8.9% higher than the previous year's 2.3 billion for the quarter. According to B Corp, its property development segment saw higher profit due to sales of several units at its recently opened Four Seasons Kyoto, as well as the recognition from a property project nearing completion in China, while both its hotel division and restaurants and cafes saw higher pre-tax profit. In contrast, its marketing of consumer products and services segment registered a pre-tax loss despite a bump in the auto sales, while the gaming business reported lower pre-tax profit. Looking ahead, B Corp says that given the prevailing economic conditions and global financial outlook, it expects the operating environment to be very challenging going forward. Bursa main market newbie FoundPac Group Berhad is looking to expand its precision engineering parts business to the US and Italy. The company is planning to use 4 million ringgit from its listing proceeds to establish offices in California and Milan. FoundPac's Group CEO Lee Chunhua said that by enhancing its current capabilities alongside empowering its sales activities in various key international markets, it will help to usher a new phase of growth for the group and its operations. FoundPac had raised 21.6 million ringgit from its listing, the last for the year, which was oversubscribed by 14.21 times. The group's main business is the development, design and manufacturing of precision engineering parts, but plans to eventually expand into the manufacturing of end-user products. The stock debuted at 61 cents and closed the day 21.3% higher than its offer price at 65.5 cents. Not fair but reasonable is what independent advisor Mercury Securities Sdn Berhad has deemed the unconditional takeover offer for the remaining shares in the store Corp Berhad. The offer had been put forward by Group MD Tan Sri Tan Yem Soon and his wife Puan Sri Kor Guit Lee back in November. According to Mercury, the not fair part was due to the fact that the 370 offer price represented a 46% discount to the company's revalued net asset valuation per share. However, in Mercury's opinion, the reasonable view outweighs the unfairness as the offer price stands higher than the store's historical trading price. Add to that the counter's illiquidity, Mercury sees the offer as a good opportunity for other shareholders to exit and realize their investment. As such, Mercury is recommending the company's other shareholders to accept the offer.